morning,
morning,
everybody.
everybody.
Welcome to
Welcome.
the Daily Rip Live. It is Tuesday, September 2nd. I am your host, Katy Perry, with Christopher Brecher. Brecher or Brecker?
Brecher.
Brecher. I was right the first time. Christopher, nice to see you.
You
Is this your first time on
on
any StockTwits show or just
or
our show?
any StockTwits show.
Wow. Okay. How are you feeling?
Fine is luckily we're coming in moderately short, stubbornly short a bank. It's working now, but we were getting nervous on Thursday and historically the week time and also just a lot of Fed comments got us really, really defensive on for really Thursday night.
What comments in particular? And actually, before we get in there, back up. I didn't even
Didn't even
introduce you
introduce
properly.
properly.
You
You
are Chart
are
Patterns
pattern
Mastery at Simpler Trading and founder of Trading Nest TV. So when you're saying we
saying
got concerned, tell us who we
what
was
we
in the
would
context of your titles, and then tell us what the comments were that caused concern.
Sure. I run for Simpler a day trading chat room, and I'm in front of the screens all day, but I'm live in the morning and the afternoon. And I do YouTube videos, and the YouTube video I did Friday morning about Waller's comments, that was the headline of it. So he's a Trump appointee, and Thursday night he came out and just said he's really worried about the non-farm payrolls coming out this Friday. And that took the wind out of the market Thursday night. And then every consumer discretionary stock went down on Friday. And I think that's because of what he said. Because still, unbelievably, the credit card stocks went up on Friday. I wouldn't have thought they would, but the Ultas of the world, the discretionary ones, just got rocked. And then you had, I think, a lot of geopolitical news that's bothered people this morning. It just started because last night the markets were unchanged. But my subscribers, I suggest ideas. I can't tell them what to do. I tell them what I'm doing. And I just told them I'm short the banks and we're long some metals. And
Mm.
that's about it. Uh, I wanted to be more short, but I don't like being short over a slow weekend. So we're just short one thing.
And Chris, how are you feeling about heading into some earnings this week? You mentioned discretionary, the Altas of the world. I know we have Dollar Tree coming up, a few others. How are you feeling about those as we enter the first full trading week of the month?
Well, I think that the tariff uncertainty, not the tariffs themselves, because we already saw a lot of people blew it off, a lot of companies. I think it comes out to company confidence. So the more that, like the big articles over the weekend was about like a lower court upholding, saying that tariffs aren't shouldn't be legal. Then it's going to the Supreme Court, and then some tariffs are higher than others. I think companies are starting to worry about how to price their goods. And I think that one of the things that's made the market go up for months is tremendous amount of stock buybacks of company confidence. And I think if their confidence starts getting hurt, that's a big fuel under the market. And the markets are overvalued anyway, historically. Just think that this uncertainty, if it bleeds into companies, that would be a big floor that it's almost like a company put, like they used to have the Fed put. So it's
Mm.
like the company put, and it seems like if companies stop buying back stock, and I'd go over that later about buyback blackouts anyway, but like last week, the whole thing with the Fed and firing Cook, nobody seemed to care at the moment. But Waller's comments did it. And I think that made companies less likely to prop the markets today.
Let's dig into the buybacks because I know you have some specific thoughts around how they've influenced markets, which you alluded to just now. For people who haven't been following this trend as closely, can you list a few examples of companies that have done this leading into the summer? And what has the impact been there? I know you also mentioned the 5 week buyback blackout before earnings. We can get into that piece next.
Yeah, sure. Is Well, when you saw the thing with tariffs, the way it works is companies voluntarily don't buy back stock 5 weeks prior to earnings. And that's more a civil thing that if they bought it back and the earnings are better than expected, it's like insider trading. So most companies voluntarily don't buy back stock they have 5 weeks prior to earnings, but they've been really accelerating their buybacks in July and August. And you saw it in April. I mean, that what it means is when companies aren't buying back stock, it doesn't mean the markets have to go down. It means bad news is more likely to affect stocks poorly. And that's why the tariffs, I think, just nailed the markets until really buybacks came back in May. So you saw that basically JP Morgan starts it off like October 14th. So they started off in April, and then really Apple is one of the latest, late April or the beginning of May. So once those were done, they're all buying back stock like crazy because they were confident the tariffs weren't going to kick in. And you even saw with Caterpillar. I mean, Caterpillar said they had 1.5 billion in tariff charges and the stock went up, but it finally started getting hit Friday. And I really think it's that that corporate confidence. But what's interesting is buybacks became legal in 1982. And the big secular bull market in stocks was 1982. I don't think it's a coincidence.
Mm.
But the biggest cracks have always been September and October, and that's the buyback blackout time.
Interesting. So when you're alluding to those examples, I mean, you mentioned historically 1982. Are there any other periods of time that are reminiscent of the pattern you're seeing now with those buybacks, or is that the best? How can people frame this up in terms of market trends over time? What does this feel like to you in the history of the market as you've been following it?
That's a great question. Uh, I'm seeing that people are thinking lower regulations, lower taxes for corporations. They're flush with cash. So cash flow is really, really high. So
Mm,
I think that's why you're seeing probably the most buybacks I've ever seen. In fact, they were saying it's a record 1.1 trillion in buybacks this year. And the only problem with that is the price to sales for companies, it was just in the papers over the weekend, is the highest since 2000. So, really odd to see. Back then, it was more speculation taking up markets. Now, I think it's really been buybacks taking up markets because the PEs are high, the price to sales is high, but it's like companies don't care, and I'll tell you right now, I'm seeing it with Apple. I get mad
mm.
all the time. I'm sitting there with my phone trying to transcribe on Siri, and I'm telling my wife, like, "I'm on live, but I'll be with you later," and it says some stuff that's totally inappropriate on Siri. I'm like, "Why isn't Apple putting more money in Siri and AI instead of buying
Yeah.
back their stock?" They're the biggest buyback people, and it drives me nuts. There have been a lot of questions about using their cash to improve their infrastructure instead of buying back stock. But at the moment, it seems to be working about
Mm.
keeping the markets up.
Well, what would need to happen for this trend to reverse or at least cool down? What factors would come into play to make these companies maybe stop buying back their stocks at the same rates they are now?
I think it's the company confidence. If they think they need to conserve cash because of uncertainty, I think that'll do it. I think what Waller said, I mean, you see it in the overall markets. The ES is down, what, 124 over 2 days. I think companies are getting nervous once they see that non-farm uh, into the non-farm payrolls. So I think it's definitely worried about the economy. I know a lot of people say, oh, inflation and companies don't like inflation. They don't like economic weakness. I
Hmm.
don't think they really care about the inflation. They try to pass the cost to the consumer, which they're having a little problem. But I think it's the non-farm payrolls or let's say economic uncertainty.
Yeah.
Geopolitical, worldwide. that can matter, and it seems to be mattering today, but I definitely think it's lack of confidence. And right now, companies have had confidence in the administration and everything. And I think if that reverses and they get nervous, I think that will have a big effect on the buybacks.
Yeah, the confidence is an interesting piece. You have the company confidence and then the consumer confidence. I read a piece in the Wall Street Journal this weekend citing data around middle class and how they feel in terms of their economic security. And the middle class feels the most worried or concerned. There's kind of a little bit of on edgeness among that group, and it kind of get ties back to some of the discretionary spending. And I'm curious your thoughts on what took so long, I guess, after the tariffs were implemented for people to uh, finally start to say, actually, yeah, I'm noticing this is hitting me in the wallet. Because it seems like, to your point, this was being kind of largely shrugged off by companies and even consumers to some degree for months and months.
I'm in awe because when was the Barbie controversy about 2 or 3 months ago when they said, Barbies are doubling in price
Oh,
and
I
the
don't remember
administration
that.
came out.
They are.
Yeah, and the, administration came out and said, "Well, then people need to buy less dolls."
Oh,
And
right. Okay. Yes.
I was in awe that nobody cared, but it just seems that, and car sales down and home prices starting to waffle down like Austin and Miami. But
Mhm.
you're right, it just seems the buybacks seem to matter more, so they keep I think when cash flow starts changing for companies and the confidence, so I think the consumer confidence, I think you're right. There's a certain point where it starts to affect companies' cash flow,
Mm.
and you didn't see it yet with Home Depot, you didn't see it with Costco really, and it's odd that the first place I saw it get nailed was Netflix and Spotify. I
Mm.
thought that was really odd, but I guess that's consumer confidence.
Well, yeah, when you say that's odd, you mean you weren't expecting to see that out of the tech companies versus physical goods, or what was strange about it to you?
Tech companies,
Mm.
definitely, or I guess they're lumping them
Energy.
into consumer discretionary, but it's funny because if you chart, the popularity of something like Love Island or, in Netflix stock, it's sort of an inverse relationship. So, the second they started putting that stuff on
Oh,
Netflix, the stock went straight down. It's amazing.
wait, that's fascinating. So are you not a big Love Island fan? You don't like the reality slate of programming there from a non-economic perspective?
Let's put it this way, my daughter's 25 and she doesn't like the shows. She's horrified with the shows. And I'm like, that's who they're trying to attract. And if she doesn't like it, I mean,
Yeah.
I mean, they need more Squid Games. That's
Yeah.
how
Well,
I look at it.
margins though, they crank those things out. It's unscripted. They're not actors. I think everyone does it and someone gets 100K at the end. I think they're trying to cut the cost, but it is true. You want
Exactly.
to go up against an Apple TV or they're putting a lot of money into the programming.
I agree with you. I mean, how much did they give Howard Stern at Spotify? I mean, at XM Radio, like
Yeah.
700 million. There's a certain point where they're competing so much with each other that the cost must be skyrocketing, so the quality goes down.
Yeah. Yeah.
So, I
That's
mean,
a
that's the way I look at it because right now we're watching Bosch reruns.
what's Bosch?
Oh, great detective show, but that's on Prime, Amazon
Okay.
Prime. But it's exactly what you're talking about, the competition.
Yeah, there's just too much content. Then you have the sports rights going across streaming and broadcast, and we have football season coming up. It seems like a crazy place to be, and you're in that spot. You're driving subscription growth, but also ads. Wouldn't want to. I wouldn't want to be running one of those businesses right now.
Yeah,
Let's just say that.
it's interesting, Spotify getting hit the most, doesn't have buybacks.
Interesting.
I mean, Tesla doesn't have buybacks, and that's gotten hit. So it's interesting to see the stocks that should be influenced the most, like Apple not going down. And then you see something like Spotify that it seems to me it shouldn't be hit as much, but because lack of buyback, I'm sorry if I obsess about buybacks, but it seems to matter.
Yeah. Hey, it's good to have your thing that you focus on, right? Like I think, Shy, my co-host, he's off getting married, but he has like 5, 6 things and he goes deep on those. And it's so good to have somebody like focused on one specific thing. So we appreciate you digging in there on the buyback side. Let's go over some of the headlines and what people can expect this week. We actually have 250 plus companies reporting earnings this week. So a whole lot more. Today we have earnings from Neo and Zscaler. Wednesday, that's tomorrow, Salesforce reports Figma. That'll be their first earnings readout since their big IPO. Asana, Dollar Tree, as we talked about with the discretionary, Campbell Soup, and American Eagle Outfitters, which had a weird quarter. They got memed a little bit because they got Sydney Sweeney, and then there was some controversy, and then they got Travis Kelsey. So I guess they're back. So we'll see. And Thursday we have Broadcom, DocuSign, Lululemon, just to name a few. Chris, are there any earnings this week of companies you follow or earnings you're curious to track in terms of the patterns you watch over the next few days that they're sort of on your radar?
Yeah, Broadcom is a big one. And it's interesting that NVIDIA, I mean, it was sort of a non event, but I mean, it's so overowned. And the
Mm,
interesting thing about Broadcom is Broadcom has, I mean, it's almost at a new high, even with all this. Finally, today it's down 7, but I believe they have a big buyback, but it's not like it's mattered. I mean, it's just gone straight up. Of and I guess that matters, but it just seems that as a group, if the Nasdaq goes down, they're going to go down no matter what. So it just you saw it with a number of them that had. Well, I'll show you a perfect one. DUOL had great earnings. The stock opened up 100 points, and it's
wow.
given it all back and more.
That's
And it's
Duolingo?
pardon me.
Duolingo?
Yeah,
Mhm.
and I think that it goes to show you that if not consumer, but the trader attitude changes, no matter what, they're gonna go down because it's not like the business is falling apart. They said the earnings were great, but just people's perception of what they'll pay for earnings or sales, it doesn't take a lot to change drastically, and that's what I think you'll see with like Broadcom.
Yeah. And Chris, we're sitting here September 2nd, so a lot can happen. But say, it's the end of the month. What do you think the most likely scenario is in terms of things we see happening in the market over the next 30 days, give or take? What are
That's
2 or 3 things you expect to see if you were a betting man?
All right. Well, I guess I am a betting man, I guess, because I trade. But no, all kidding aside, in January, it wasn't really popular, but I told everybody I thought there would be a 10% correction. And a lot of that's funny. We haven't talked about charts at all, even though I run chart patterns mastery. But it seems to me that if you have lack of buybacks and all this confidence problem, I think the biggest thing to watch is yields because everybody talking about lowering yields and the pressure to lower the short-term yields, but that might make long-term yields go even higher. And if long-term, I mean, from you were talking about the worries of the middle class, if mortgage rates go up, but their money market rates go down, that can't be good either. And so I think right now the long bond is at a critical juncture. If it has another leg down, breaks 5% yield and goes to 5.5, I think you see the S&P by the middle of October down 10% again. I know that's a probably not the most popular view, but that's how it looks to me.
And that's the same scenario regardless of what happens at the Fed meeting for you, September 16th, 17th. That's you think that's is that tied to anything you anticipate to happen at the Fed meeting? Obviously, the prediction markets have it overwhelmingly likely we're going to see a cut. But how would that factor into sort of the picture you're painting for the markets into October?
That's a great question. I think let's just say the non-farm payroll is what Waller said, 65,000, which is really low. Then I think it's already factored in about the Fed, and then the Fed's in a pickle because if they lower too much, it's inflationary, and then it'll spook everybody. Because why are they lowering that much? Are they giving in to Trump, or is it because the economy's so weak? And if they don't cut enough, everybody's already expecting them to cut a lot. That could make the markets go down as well. Plus, then you're in the buyback blackout time. The maximum where the most companies are in the blackout is about October, let's say 10th.
Mm,
So that's why I was saying by the middle of October, I thought we'd be down a lot. But it's also watching world markets. So we're watching the Nikkei finally sell off, but I'm telling you right now, when the markets were down in April, the German market, the DAX, was at an all-time high, and I'm like, and it usually correlates great with the New York markets. So we were like similar charts as similar outcomes. So we thought the ES would rally, but now the German markets, if you look, they've broken their 50 moving average, and they're where they were July 31st. Well, very odd to see that lead. So it led to the upside. And now if the S&P goes to where it was July 31st, I'm looking on that chart here, you're
mhm.
talking about 6,200. So that's almost 5% anyway. So,
Yeah.
and that's just if it follows some other big world markets.
Okay. So yeah, it's good to get that global view. And you mentioned obviously charts are a big part of your day to day. So curious, over the weekend, hopefully you got some R&R time away from the screens. But as you're sort of locking in for this month, this week, anything interesting you're picking up on? Any specific charts you're following or things you've seen as you prepare for the week or month ahead that you think would be interesting to share with the traders watching our show?
Yeah. I'm looking at the financials. I mean, on what you said with the middle class, I have no idea how Capital One and MasterCard can be almost all-time highs. So I think if you start seeing, I'm really watching the credit cards and the banks. Usually they're the ones that really lead markets. I know everybody talks about tech, but I just think a sustained sell-off, you got to see the financials weaken. I mean,
Mm,
I'm fascinated that even on Friday, I mean, if you look at the chart, Capital One closed almost down its high. I don't know how it did that. So if I see those start to crack, I think that'll be a big deal. So I'm watching those. When I'm watching the Nvidias of the world, which I'm sure is down, at least they're down near support. So Nvidia had 170 as support. And I think you're right about FIG on how the traders react to it. But another thing I think a lot of people are missing, a lot of these hot IPOs you talked about, their insider lockup expiration is 6 months after
yep.
their IPO. So that's going to be coming up in October for a lot of them.
Oh, wow. Yeah, I didn't think about that because Figma's got away, but there was some before that, you're saying. CoreWeave, some of those that went out earlier?
I think was allowed to sell some of it beforehand.
Okay.
So actually, ironically, I like CoreWeave. Not like I mean, I know it was up a lot on Friday, but at least they got some of that out of the way.
Mhm.
So I know it's down today. I think it's down, I mean, like 6. So, but there are a number of other ones. I don't have the list right in front of me, but they're going to be coming up. I go to a thing called IPO Scoop,
Mm.
and that shows a lot of the more like, let's say, 100 different, the prior 100 IPOs. And then I just sort them by price. Usually that's
Ah,
how I do it, or
okay.
date. I actually date.
So that's tracking, okay, post IPO, not incoming. Um,
Right.
oh,
I
great.
think
Okay,
they have, upcoming also,
cool.
and one thing we saw with the NVIDIAs and stuff, the more IPOs of these tech, the more the old guard like Microsoft stopped going up and Meta stopped going
Mm,
up, it sort of sucks the money that could be deployed to them to the new issues. So it's sort of that's why I think you've seen Microsoft just do nothing since earnings.
interesting. Well, speaking of like IPOs, so we have a few getting ready to go on the sideline. Klarna, which was going to go out in 2021, they're ready to go. Gemini, crypto exchange, a few others. So, do they have a what does their window look like to get out if the markets do correct a bit, into October as you predict?
Um, about should they come out? I'm telling you, I think they should come out in November.
Mm,
Just come out in November and not worry about it right now. But I don't know what they're I mean, it's still I mean, if you go to, let's say, AI, C3 AI,
yeah.
and you see the stock's gone down 50%, in the last month, you just gotta think they'd hold it off till November.
Yeah. Yeah, it's definitely it seems like an interesting timing situation because sometimes you hold up a little bit and then you miss a pocket for could be years.
I
Um,
mean, in the grand scheme of things, I mean, the NDX is down today, but it's what? It's 2 weeks from an all-time high, so maybe you're right. They should get it out now.
yeah, it's definitely a tricky game to play, and then you also want to, like to your point, the interest is there, the excitement is there. I'm in New York City, and the Figma IPO, people from tech companies I've worked with, ad agencies running around Wall Street. Uh, I hadn't seen that much buzz for an IPO in a while, and that could have been a little bit of just confirmation bias among the people in my circle. But it seems like you'd want to capture that excitement potentially before it goes away.
Yeah, I mean, it's a it's a tough tightrope. I think if they did them now, great. I think if they go and they coincide with buyback blackout and malaise and all that, yeah, I think that sooner the better. Let's put it that way. The next 3 weeks would be better than that historically weak time in October.
Yeah. And Chris, I know we only have you for a couple more minutes, but on a personal note, you're a very familiar face in the community. Would love to hear how you found StockTwits, how you participate. If people don't know you, which I'm sure they do, how they can find you and follow you there.
I'm at, Chris Brecher, I think, or Christopher Brecher or Hey You, but, no, it's Christopher Brecher, and I have a lot of followers, but I've been posting since 2009. Oh, you hear the
Wow.
bell. And basically, I talked to Howard about how to post, and almost every post I've had is content. So he's always post, don't boast. So I've definitely been posting content, and luckily a lot of it's is worked out, and it's just basics. I don't really most of it's chart based,
Hmm.
and it's work, but it's also about being consistent about posting. So
Yeah.
not posting today and then posting in a month. So I
Right.
try to keep me relevant so I can help as many people as possible.
You gotta give the people what they want, you know? And I'm curious when it like 2009, so that the economy was in a sticky situation then. What was it like in the trading community, post, you had the collapse of Lehman Brothers in 2008, and we were just talking about the banks. Was that kind of drama what drew you to participate in the community in the first place?
It's more that I saw the trend towards social media and I like
Mm.
StockTwits. I like their concept and I liked Howard and I liked it sounds like past tense, like I don't like him now. I like
Yeah, he's
Howard
okay. He's kinda washed
and
up now, he's
he's
definitely not
probably
watching
listening.
this.
But no, definitely I just saw the trend towards social media and I like it was more that I was following other people. I
Yeah.
really like their content. And I'm like, I've been doing it forever. Why aren't I posting? So
Yeah.
I started posting, but it's definitely a great place to learn and to find trade ideas.
And then you mentioned a YouTube channel. Is that another place people can find you and explore some of your thinking around the markets?
Just started that though. I started a new one. It's Chris Brecher, and then it's like a hyphen 1929, but it's at Chris Brecher.
All right, throw this
So
guy a follow, guys. Get in there.
I collect books on the stock market from even the 1800s,
Oh,
from the
wow.
Civil War, and I have probably 100 old books. I have 4 first editions of the 1948 Bible, the technical analysis of stocks by N,
Wow.
and the Jesse Livermore books. You name it, I have it. But that's why it's dash 1929 because I've collected a lot of books on that. And then, like I said, I'm gonna have a new site, tradingnest.tv, coming up
Very
in
cool.
probably November.
So many ways to see you, and we'll have to have you swing by again. We're gonna wrap up here. Actually, I got a plane to catch, Christopher. If you can believe that, we're actually doing the show from San Francisco tomorrow for the rest of the week because we're gonna be at the Gateway Investor Conference. So
I
we'll be doing the show live from there. There's, I think, 60 plus growth stocks represented. I think I have interviews with about 10 CEOs in the next 48 hours. So you really set a high bar for them, Christopher, with your insights and thoughtfulness. But we're gonna end a little early today so I can catch my flight. But come back with us soon, and everyone else will be back tomorrow morning, 9 a.m. Eastern, live from the Gateway IR conference. Thank you again, Christopher.
Oh, thanks again for having me on. Take care and have a safe trip.
Thanks.